Imagine waking up to a financial landscape where every economic whisper could shake the stock market. That's the tense atmosphere right now as investors hold their breath for key inflation data that's set to drop soon. But here's where it gets controversial. With a government shutdown muddying the waters and no federal reports in sight, this CPI release isn't just a number. It's a potential powder keg for debates on tariffs, inflation trends, and even the Federal Reserve's next moves. Stick around as we dive into the latest stock futures updates, unpack what it all means for beginners, and explore why some experts see this as a golden opportunity, while others fear hidden pitfalls. As of Thursday evening, stock futures are showing minimal movement in anticipation of the eagerly awaited inflation report. Picture futures linked to the Dow Jones Industrial Average dipping by 13 points, a mere 0.03% drop, while SP futures edged up a tiny 0.06%, and NASDAQ 100 futures gained a modest 0.1%. These subtle shifts reflect a market in a holding pattern, waiting for clarity. In the after-hours trading session, things heated up a bit. Intel's shares surged almost 7% following the chipmaker's third-quarter sales that outperformed expectations. A win for investors betting on renewed demand for PCs. Meanwhile, Target's stock ticked up slightly after the retailer revealed plans to trim its corporate workforce by 8%, their first significant layoffs in 10 years amid sales challenges. Other companies, like Applied Materials and Rivian, also announced job cuts, highlighting the real-world impacts on workers and markets. Looking back, the major U.S. stock indexes wrapped up the previous trading day on a positive note, fueled by strong investments in tech, and analysts will scrutinize whether inflation is easing or intensifying, and crucially, if recent tariffs are driving up consumer costs. To clarify for newcomers, the CPI measures price changes across everyday goods and services, like groceries and rent. Rising inflation means higher costs for consumers, which can cool spending and pressure the Fed to adjust policies. Originally scheduled for October 15th, this CPI reading stands as the final economic insight before the Federal Reserve's upcoming October meeting. Most market watchers anticipate the Fed to cut interest rates another quarter point, a move that could loosen borrowing and stimulate the economy. But here's the part most people miss. The shutdown's interference might force the Fed to rely more on assumptions than solid data, sparking debates about transparency and decision-making in high-stakes finance. As Vishal Kanduja, head of broad markets fixed income at Morgan Stanley Investment Management, pointed out, markets remain cautious as the lack of clean economic data adds uncertainty for both the Fed and investors. Until more reliable data emerges, the Fed is likely to adhere to market-priced expectations, though Friday's CPI should provide greater clarity. The impact of tariffs creeping into inflation will be key. In other words, tariffs could quietly inflate prices, affecting everything from imported goods to household budgets, a controversial angle that begs the question, are these trade policies helping or hurting American consumers long-term? Stocks are poised for weekly gains following Thursday's rebounds that wiped out Wednesday's downturns. The SP 500 is on track for a 1.1% increase, while the NASDAQ and Dow Jones Industrial Average are eyeing nearly 1.2% each. This momentum underscores a resilient market, but it also raises eyebrows about whether it's sustainable without more economic stability. Just 25 minutes ago, we saw more action in after-hours trading, with stocks like Alphabet, Ford, Deckers, and Newmont making waves. Here's a closer look at the companies capturing headlines. Alphabet. Shares of the search engine powerhouse rose 1% after Anthropic and Google unveiled their massive cloud partnership. Valued in the tens of billions, this deal grants Anthropic access to up to 1 million of Google's specialized tensor processing units, TPUs, supercharging AI capabilities and potentially revolutionizing cloud computing. Ford Motor, the Detroit automaker's stock leapt 4% in after-hours trade. While third-quarter earnings beat expectations, the company revised its full-year outlook downward due to a supplier fire's disruptions. Ford posted adjusted earnings per share of 45 cents on $47.19 billion in revenue, surpassing the 36 cents and $43.8 billion analysts had forecasted. Target, the discount retailer's shares edged up less than 1% after announcing an 8% cut to its corporate workforce, affecting roughly 1,800 positions and marking a rare move for a company known for stability. Intel shares bolted up about 7% on third-quarter sales that exceeded estimates, boosting hopes for recovery in PC processor demand. With the U.S. government as its largest shareholder following the Trump administration's 10% stake in August, Intel reported adjusted earnings of 23 cents per share and $13.65 billion in revenue, outpacing the $13.14 billion expected by analysts. For the complete rundown of movers, check out the full list here. These updates show how individual company performances can ripple through the market, offering lessons for investors on diversification and timing. PSing. About 37 minutes ago, U.S. stock futures opened with minimal changes, setting the stage for what could be a defining day. What do you think? Should the Fed lean more on market expectations during data gaps, or is this approach too risky? And how might tariffs reshaping inflation spark broader economic debates? Share your thoughts in the comments below. Do you agree with the cautious outlook or see this as a chance for bold gains? Let's discuss.